Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. I got Greg Machinery Pete Peterson on to talk about what's happening in the world of equipment. Greg, how you doing today?
I'm doing well, Casey. How are you?
Doing good, man. Doing real good. It's we were talking about a few things before we got started here, and we've talked about this back and forth for a while now, but there's some gaps in inventory, and there's some slugs in inventory too, right? And if you look at how things are going, you're starting to see some of this, some of these gaps get to be a little bit wider than they were a while back. So, for example, let's take a look at 3 to 5 year old equipment. That's been a hot button. You talked about in the auction space, but that's looked like. I mean, even if you go from 6 to 10 year old stuff, again, even a hotter spot. That 1 to 2 year old stuff, you're starting to see some movement there, but not a ton. Right? You're not seeing it just fly off the shelf by any means, but you are seeing some movement there. I guess as you.
Yeah, I think it's. So I posted a note on social media this weekend, Casey. Just facts, what we're seeing, and I was looking at the late model John Deere high horse tractors, and so, for example, 8R 370s, the average auction price this year is up 12.3%, which surprises people. If you're not following this every day, it's like, what? Why would that be up 12.3%? And by the way, that average is 347.3, just about 347.4. But a big part of that is how bad the last 2 years were. So yes, it's up 12.3%, but I mean, it took a huge drop in 24, the same drop we saw just over a decade ago when that big downturn. So the supply of good used is tightening. It just is. You and I, we can look at the back end of machinerypete.com and we see the numbers. This morning, I had a text from a very large Deere dealer in the central U.S., and he just came right out and said it. He said, we're shopping for used. And that's the second large Deere dealer I've had tell me that in the last month. Now, is every dealer tight on used? No. But compared to 18 to 24 months ago, this is way tighter. And now you start looking at the markets last week. You and I have been talking about rising auction prices since June 15th is about when I saw them go up. And now with corn and beans, who knows if it'll sustain the rally? I don't know. I mean, you hope so. But it's 36 years doing this. It is unusual to see a jump in used values in June and July. It is exceedingly rare. And to see it pretty sharply this year, and now to have commodity prices, I mean, I don't know what stuff's going to sell for tomorrow. I'll report on it. But up to this point, when the 8R 370 is up 12.3%, 8R 410s are up 1.2%, 8R 340s are up 4.7%, 8R 310s are up 1.7%. It is what it is. And again, I think the second half of 26 is going to be fascinating on the equipment front.
Yeah, it'll be interesting. I mean, here's what I'm paying attention to, Greg. I think as you look at order can't talk this morning, order writing period as they go through this last, basically now through the end of the year, depending on the manufacturer where you're at. But if you're looking at the amount of new equipment that's going to be sold, it's going to be less than it was when you've talked about that ad nauseum on here. That's not any big shock, but that's going to generate less 1 and 2 year old stuff to come in on, and maybe 1 to 3 year old stuff come in on trade. I think that's great. I think we're right. So I think for my first time looking at this box, this is the first time the box is actually filled to its capacity and not just completely overflowing with the amount of inventory that we see. As you continue to watch things move along and bounce along, what I think this does is that it opens the door to a more solid floor and a more solid fallback if something does happen, right? I think it falls back to a certain point because it comes back to supply. I don't think, by no means do I think, like you and I maybe have a little different opinion as to where things are. Like a big blow up in in demand and what that might look like. I think right now we are at the perfect level of supply and perfect level of demand. Now, some people are out there. I can already hear some dealerships out there saying, like, "Well, come take a look at my lot and tell me about supply and demand." And my argument would be, you have supply and demand in certain areas that are out of whack, right? And I think, and like I went to earlier, that 1 and 2 year old stuff, the high dollar or expensive used equipment that's out there, is a choke point in a lot of sales funnels. But once you get past that, that other stuff is selling quickly, and it's a price point thing, and all the things that are coming into play. I think the market has spoken as to what level they're willing to pay for things, and when it gets to be above $600,000, like, we've talked about these Class 10, Class 11 combines out there. It's hard to find one that sold at auction that was above $625,000 or $650,000 with a really low hour moniker on that 1 and 2 year old machine. We've watched 150, 200, 300 hour machines sell for $650 or less, or $650,000 or less. Whereas you go out and look and see where the ask pricing are, those are still there. One thing that's happened with this, Greg, is that what we've talked about, you and I talked about this several times. Go pick me a machine, bring it to me. Let's take a look at the auction values compared to retail value, and those numbers are down under my 120% rule, and you're just different math on the other side just to come around to the same number. But if you look at where those things are tightened up at, the combines that I've looked at on the marketplace are falling in between 113 to 115% of auction value. That's how far that is from the last time I ran those numbers a couple of years ago. That's almost 35, 40% down as far as retail numbers have come down into play. I think to your point, why we're starting to see things heat up and move forward is that the retail space has caught up with the auction space, and now there's parity, quote unquote parity, in those numbers. And so now if I'm looking at this, I have what's the benefit for me to go to auction and buy something, right? Is that juice worth the squeeze? Now those conversations start to come into play, because you buy something from dealership, there's a standard of expectations that's unwritten, right? That you see come across there. You don't see that same level of expectation. Auction gets, again, that's why the value is so much different. But as you watch these things, this parity take place, I am looking towards the end of the year as seeing a movement in some of these 1 and 2 year old machines that we haven't seen probably in the last 2.5, 3 years, that are going to put those machines, I think, in a good position to be ready to move. If we continue down the same path we're going, as you look at where commodity prices are headed right now.
Yeah, agree. I think it's the new normal we've talked about here for months now. And I mean, it is what it is. We don't have to, you can like or dislike these hard cash auction price. I mean, they're just what people are paying. So I shared a note on Saturday. Now, this is a bit older machine, but it was a sale in Lakefield, Minnesota. Zomer Company Auction and Realty had the sale. I think it was for Lockstep Farms was the name of the farm. And nothing spectacular on the sale, but just a nice combine, a 9670 SDS. So yeah, it's older, it's pre-def, it's whatever, 9 or 10 model, something like that. 2,546 engine hours, but it went for 99 and a quarter. That's the third highest auction price ever on a 9670 with over 2,500 engine hours. And like you said, the market is speaking. Whether it's in that older pre-def, it's like that's been running up, tractors and combines, skid steers, sprayers. 1, 2, 3 year old stuff, the market is speaking. Like you say, that $600,000 ceiling is what it is. There was an interesting comment on that post thread on social media, and I can't remember the guy's name, but he said, well, welcome to Havana North, Cuba North. And what he was talking about was, I mean, social media is what it is, but the new stuff is really expensive. And $1 million, $800,000. And that's the thing, this downturn, I mean, before corn and beans went up this last week, has stretched on a long time. And that, like you said, the level of new equipment has been dropping, low. So we don't have the 1, 2, 3 year old out there. People are they're voting used right now. And they're doing it at the same time when the overall supply is tightening. And yes, certain dealers have way too much, but no question, the overall supply is, I mean, it's just way tighter. I look at the falling blue line across every equipment sector. And so we're sailing into corn and beans going up. Now, again, we don't know if they're going to stick, but just like you said, the end of the year, I think you're right. I think it is that new normal. It's in more balance.
Right.
And to me, a huge piece of it was there's fewer dealers. And these dealers are huge now. And so, like we mentioned before, last year and 2 years ago, average auction prices stunk. Now, 2 years ago, that was because dealers put an avalanche of late model stuff on the used market because they were tired of paying 8% sitting on their lot. They ain't going to do that. So all this stuff is swirled together. And again, if you're looking, whether you're on the dealer side or the farmer side, your equipment needs, I think there's a real danger in just blindly assuming, things are tough and dealers have way too much stuff. And it's like I say, I had 2 huge dealers in the last month say, we need more used. Now that, I can give you a zillion billion auction prices and we can talk about data points and trends and stuff. But that's pretty telling right there. 2 huge dealers going, we don't have enough used. So I guess plan accordingly if you're looking to do something in the space coming in the next 6 months.
Yep. Yeah. I think as you look out towards the end of the year, Greg, I think we've hit. Go ahead.
Well, I was just going to say, I'll just put it to you, Casey. So again, we don't have a crystal ball. We don't know if corn and beans are going to stay up. But when used values, your correlation that you do with new or list price to auction and the way I do it, auction to used, is showing the same thing. It's the used values are rising. So do you think, given this situation, if corn and beans had a nice little run sustained here, and we get to the end of the year, the new order, I mean, do you think, what's it going to take for farmers to go, I do need that new combine, I do need that new planter, I do need that new tractor? Because it's been, we've all been watching the numbers fall on the new sales side across the board. So what changes that?
So I think that's a good question. I think when you look at where does that fall in there, and if I get this right, Greg, you gotta and you go out and buy a bunch of corn and beans, and you gotta cut me in on it. But
Okay.
but if I'm looking at this, I've always said you need 550 cash corn is what you need to have, right? I think that's what you need to have to be a perfect equilibrium. Everybody's doing what they need to do. It's probably a little higher today. When I used to say that, it was a different world. That's probably a little bit higher than that today. But I always go back to a point in time when coming out of COVID, corn hit $3, and everyone was like, "Oh my God, the world's coming to an end." And you kind of watch it bounce back and forth, and it finally got to 375 one day, and it just like the markets went crazy. I mean, people were selling corn, and it didn't correct. It went to 4.25, it went to 450, so on and so forth, kept going across the board. When I watched guys sell stuff for 375 at that time, it was whatever 50 cents below their costs at that point. And I was like, man, why are they, I know you need to sell some stuff to keep things squared away, but it wasn't just like people were selling a little bit. They were selling into that hard, and it moved things for us. What that taught me was the price of corn matters, but the way it moves matters more. And it's every quarter move does something crazy along the way. And so we kind of saw this a little bit ago, when it went from, where it was at, and then kind of worked its way up to the 460s. It triggered some buying or some selling of corn and those kind of things. So I think if things continue on the way they're at, there's a lot of stuff ahead of them that they got to get squared away first, right? There's a lot of stuff with banks and all those kind of things they got to get squared, inputs, all that kind of stuff they got to get squared away first, right, before the equipment comes into play. And what scares me about those kind of things. Once that stuff settle up, how much money is left over to actually come into the equipment space and buy, right? I think there'll be, equity positions and those kind of things. You can see that. I still believe that we are going to have a good run at the end of the year, that last quarter of the year, as to what the market was going to look like and how things are going to play out. I think right now where we're at, I haven't looked at the crops today, but it's like 458 or something like that. If you get that 475 to $5 range on the board, you figure whatever basis is, and it puts you back down that 450, 475 range when you figure basis. I think that opens some doors to a lot of people saying, "Hey, I'm gonna update. Maybe not my tractor, maybe not those, but I'm gonna update those machines that have a lot of wear on them, like choppers, combines, windrowers, those kind of things.
Yeah.
Where there's a lot of moving parts, a lot of things that are taken away that are going to give you some opportunity to see that move. I think the tractor business and maybe the sprayer business a little bit maybe peaks up, but some of those things like that I think are going to be pretty well baked in. You start looking at, I need to update my combine, or I'm gonna spend some money on my combine this year. Those kind of things. I think that's what you see happening towards the end of the year.
I would agree. I would think that those other financial issues for farmers, maybe compared to past upturns, will be more prominent this time. So, I think you're right about that. And I also think the fascinating thing psychologically for me right now is just, again, I keep talking about it, but farmer, everywhere I go, I've been on the road a ton this summer, and plus online every day talking to our audience. Thank you guys for following. But just the mindset. I mean, farmers are just squarely focused on used right now.
Yeah.
And we see the new sales have been dropping, and we can, too much or not too much. But this mindset is becoming cemented. And now we started to see this uptick in auction pricing before corn and beans went up.
Right.
So I think that's and I've said this before, but every other time in my 36 and a half years tracking this market, when auction prices went up, sales of new went up.
Yeah.
Lockstep. I mean, like boom, boom. Farmers had money. Some want used, some want new. Now, that was my question. Is like, what's it going to take to make new go whoop to take off? Yep. And if you continue to crunch the used inventory, like you said at the top, you're not selling. Hasn't much been sold the last couple of years. So 1 and 2 year old stuff compared to past years there just isn't as much of it. Will it take used prices going up enough where people go, you know what? I'm better buying new and get my warranty and the whole bit. I don't know. But the rest of the year, like I say, it's just shaping up to be super, super interesting.
Yeah, the new thing is always, again, kind of going back to the whole new normal thing. I mean, when I first started out doing this, it was not uncommon to have a guy buy a brand new combine and buy used tractors, or buy used combines and new tractors. Like there's this kind of mix and match of how they went about doing that. And I don't see that right now. You're not going to see that right now. And I think as you look at where does a new buyer come into play, I have a hard time taking a look at some of these lower end manufacturer discounts that you see coming in, where you can make that work comparatively to the past. I'm going to sit here and say this. I really believe that as you look at the big market as a whole, you're going to have the very small amount of people that buy new equipment, and you're going to have a bigger chunk of people that buy some kind of a hybrid into that thing, right? Because am I going to buy 1 to 2 year old stuff, and I start looking at the upgrade kits and how those are going to play into my operation? Am I going to start extending out my trade cycles and those kind of things? I just look at this and I just think it's dynamically changing to where you're going to have the supply coming back in to the marketplace is going to continue to be small. I don't see hey, you know what, we're going to go out, we're going to triple the number of combines that get sold this year. I don't see that happening, just because of the cost, the price, and the available buyers for those machines.
Right. I agree. That's exactly what I see. And that's that new normal. And that to me is the dangerous part, especially on the farmer side, is if you aren't, if you're not paying attention to this, the way you've been rolling. And so if you were a used buyer, you were that second or third buyer, that whole funnel is changing.
Yeah.
And so that to me is being reflected here recently in these auction pricing. So that, for example, that 9670 Saturday, it was like 2 days ago, 2,500 engine hours. Now it wasn't long ago with, no matter how nice it was with 2,500 engine hours, it ain't going to push 100.
Right.
It brought 99 and a quarter Saturday because that's smart. It wasn't one farmer or two bidding on it. It was a ton. Zomer brings them in from all over the place, like all our great auction partners do. And it's harder to find them.
Yeah.
And then, like I say, it's just fascinating to see it play out in real time. But again, what we're talking about is a complete reordering of the new and used ecosystem and how they work together.
Yeah.
You're right. Just based on the dollars, we probably aren't looking at an onslaught, even if corn stays up, of farmers running out to buy a zillion billion combines.
Yep. And I think, like your point, a little bit to your point there too, that solidifies that 5 to, your traditional auction age, that 4 to 5 to 10, 12-year-old piece of equipment. You're really driving in a super hard bottom into those things where that, even if it falls back, it's going to be kind of right there.
Well, again, that's why I find it interesting, reporting on the space, whatever 3 million auction prices we've compiled. But again, I can sit here and tell you a bunch of 8R370s. Okay, this one 24 model, X number of hours of brought X, da-da-da. It is interesting in aggregate to look at the average. And, you and I have both done this for decades now, but it's significant when you're sitting here over halfway through the year and the 8R370 is up 12.3% hard cash. Write me a check today at auction.
Right.
That's just, again, that's the piece where, particularly on the farmer side, well, so the dealers, those two dealers now, they've told me, hey, we're buying used inventory. Okay, well, that's interesting to know.
Yeah.
And on the farmer side, again, smart farmers are paying close attention to this because, again, to sit back, you're really dangerous to sit back and assume anything in a changing market. But we have rapidly changing forces at work here that are going to affect every side of this business.
For sure. And that's why you have to pay attention to data points. Those data points are all going to give you a significantly greater correction and a bigger window to look through as to what's going on around you. Because my opinion of this is if you're still looking at equipment the same way that you're looking at it today that you were looking at it 5-10 years ago, I think you're making a horrible mistake because it's just not the same. It's
you're just going to pay more money than you want to in a timeline when you don't want to act.
Yeah, for sure. Absolutely. All right, Greg, good place to stop there. If folks want to reach out to you and get you to come to their auction or do some speaking for them, best way to do that, just hit you up in your socials. We'll go over to machinerypeak.com.
Just on the website, there's a contact button there. And before we tap out, Casey, we should do a quick little shout out for Howard Coons. Howard passed last Thursday's age 73 with Coons Equipment. Everyone knows Coons Equipment, Arthur, Illinois, Gibson City, tremendous dealership. So our condolences go to the Coons family and really an amazing family there. Howard went to work for his dad when he was 15 years old. And I think you go way back, it was 1956. The story goes Abe Coons, sitting under a shade tree, started making equipment for farmers, what they needed, of course, running gears. Then they got up, they make Easy Trail grain carts. Amazing company. But again, our thoughts and hearts are with the Coons family on Howard's passing last week.
Yeah, no, that's sorry to hear that. I've done some work with the Coons family over the years on
good people
back and forth. Yeah, they are good people. Good people. Well, thoughts and prayers go out to the Coons family, and we'll keep you in our thoughts, and we'll see where this goes. But Greg, I appreciate you being on the podcast. We'll catch you again next week.
You bet. Have a good week, Casey.
All right, thanks.
Well, there they are, mocking you. See you next year, loser. That weedy area that's got you thinking. Man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Got Rich Boston on here to talk about what's happening in the economy. Rich, how you doing this morning?
Good. Thank you for having me on again.
Yep, glad to have you back, man. Rich has got a great podcast, talks about everything that's going on in the economy, the drivers, interest rates, how stock market's doing, those kind of things. And what Rich really does well is he matches everything to business cycles, and he talks about that on his podcast. So, Rich, how can people find your podcast?
Yes, go to criticalpointpod.com. You'll find some free things unlocked and some locked things. So there's a subscription. Some of these subscriptions are only $18 a month, 60-day free trial. And I put out a morning brief, a separate one that's just 3 grain markets and any other commodities I happen to want to throw in. And then the other one is really on the stock market, interest rates, economy, but it can also get into dollar, Bitcoin, crude oil, all of that. Try to keep these as brief as possible. There's usually like a snapshot at first for 5 minutes. Then I can talk about anything I want afterwards. And then for those who are interested in the bigger moves during a year and long-term stuff, or they just don't need to be updated every day, I have a weekly update. Now, those can be as large as 45 minutes sometimes, hopefully no longer than 30, 25. But that's where I'll get into those larger trends, long-term stuff. And then I put out alerts, warnings, signals. So they might be tied into the weekly update or morning briefs, but they might be separate. So I tell people if they're not following every single day, just take a look every day. You see that word alert in a title, it may mean something for you. You better get on board, okay?
Right.
But yeah, criticalpointpod.com.
Okay, right on. Check it out. It's great stuff. It's like Rich said, not too many things in life you get a 60-day free trial, so he's pretty confident you're going to like it. And check that out. Get a lot of good stuff there. All right, Rich, let's jump over and talk about what's going on with oil right now. So you got obviously the U.S.-Iran war. The Strait of Hormuz is open one day, closed the next. You're seeing a big crimp on oil, but surprisingly enough, basically because of a few factors, what some countries have done when this first started and how much oil they bought. And the amount of time it takes oil to get from the Strait of Hormuz to the rest of the world, and the supply that's out there as well. We haven't really felt the crunch that we should be feeling based around this. So as you look at the price of oil right now, Rich, you've seen some things happen here the last couple of days. But as you look at the price of oil, talk to me what you think's happening there and how you see it fitting into your economy structure.
Yeah, probably a couple of weeks ago, I put out a free newsletter that you can find on the website. It's usually on the front page, but it's also under blog if you can't find it. It's called Notes from a Napkin, and I'm discuss all kinds of things going on there. And I mentioned that a lot of economists kind of messed up on the oil when the prices exploded. They thought it would just go higher and higher and higher, and they missed the fact that China has big inventories. They store a lot more of anything and everything, whereas the U.S. has given up on storing anything. You just order it when you need it, that kind of stuff. And so they're just trying to manage their risk better because such a large population. But you also had Japan doing a pretty good job cutting back their oil usage. A few other countries, you had oil companies that today, or for that matter, it's even in the grain markets, you just see better logistics, better shipping around the world and storage. That kind of helped out there as well. But also the alternative energy has made such a big impact that our old statistics, even just 10 years ago to 50 years ago, they're very difficult to use now to predict how high the price is because alternative energy has made a big, big impact. So I was writing on this saying this is why prices have already come down. They didn't go as high as everybody thought. I was feeling pretty good about that. But I didn't put in the newsletter. I had to save it for my members. What I was about that time saying, right in early July, we got to look for a bottom in oil prices. They're probably going higher in July and may go higher in August. And that has worked for me fantastic. The model was just nailing it. Even today, yesterday, it said oil will be down tomorrow, and it's down $2 today. It's been nailing it every single day of whether it's an up day, down day. This has been a very orderly melt up in oil prices. We've gone from $70 right back up to $100. Oil just bam, put it right back up there. What's going on is that oil tank for the world is the lowest it's been in the 1980s. But people and businesses were willing to not get too scared about that up until now. Okay. So this was a very delayed reaction, and the futures market gave in, brought the price of oil down, saying people are going to survive. They're going to make this work. Okay. Iran will be over. Well, now we know Iran is not over. Okay. If anything, it's worse, right? So we're back to shipping very few boatloads of oil out, and, it takes weeks to get them out to the next port and this and that. So the oil market's compensating, revisiting this, saying, gee, maybe we put prices down too soon here and got carried away, and that oil tank's just getting lower and lower all the time. So yeah, I was looking for $85 oil. Now I'm looking for $105 oil on the U.S. market here. The targets have been working very well for me. And granted that, they could fix this any day now and knock the price down for the next couple of months or something. But the problem is it could just continue higher into August and then come down. Meaning, if we didn't have the Iran thing, I'd be bullish oil now anyway. So it'd just be normal business cycle supply demand. What we've done is piled the Iran thing on top of that. So yes, I could. Yeah, I could see 30 days from now, normally we would put oil down anyway. So if they'll fix the Iran thing, then it's really coming down. If they don't fix the Iran thing, it's not coming down as much, right? So you could see the standard supply demand still working there, okay? But right at the moment, yeah, I don't think the stock market's going to like this. Nobody's going to like this. The price is going back up at the pump, so that's all there is to it. Yep.
So that, a couple of weeks ago, you had the CPI report come out, and, of course, everyone's talking about how great had some deflationary moves in pricing because of the price, which you talked about there. The price of oil came down so much when that report had come out. So that kind of shed some positive light on the overall economy when you start looking at inflation. Talk to me about the CPI report you saw there, and then the Fed and the interest rates and all that stuff, and how all that's playing into this mix.
Yeah, that CPI, it was due for a normal inter-year fluctuation to the downside, and we got it. Granted, it was driven by some of this idea that maybe we can get around this U.S.-Iran thing a little sooner, a little faster, this and that. But now that the oil price is going back up, we should see another up move in CPI. I think it was just too soon to top this CPI out. We're going to have some inflation problems here yet lingering on. And last year, I turned positive, bullish on inflation, saying it ought to be up this year into next year. It could top out later this year here. But I got a feeling, we've got more upside coming here. The Federal Reserve, for the most part, has been saying lately, they probably got to raise rates and really work at this and be aggressive. The weird thing this morning, though, is I got to go back and read it. There's an article on bluebook.com saying economists think there's actually going to be an interest rate cut later this year here, and I'm not too sure. Well, I want to bet on that. I've been positive interest rates, and I'm looking really smart on it in the last few weeks, right along with this oil. So to me, that was just a blip on the inflation. I think you better assume it's going to be back up in coming months. We also just got a blip up in the consumer sentiment, and I use that as a happy indicator. And the consumer sentiment has been declining since 2000, and it's the lowest it's ever been under Trump here. It's in the gutter. We're not happy. We are unhappy and getting worse. Well, the interesting thing is I forecast we'd get a blip up this summer on the consumer sentiment. And my friends were picking on me just 30 days ago saying it's not going to work, Rich. Nobody's happy. How can it blip up this summer? We just got the consumer sentiment and it's blipped up for July. I think that's also a blip up, just as the inflation was a blip down. So we're going to put the inflation back up, and the consumer's going to be upset by August. Okay, so no, we haven't fixed anything, Casey. We're all in the dumpster.
Okay, all right. Good news, Rich. All right, sounds great. All right. So one thing you've talked a lot about is that you look at government debt, and you're not as concerned as a lot of stuff that you hear about people talk on TV, right? Everyone talks about we're on a collapse and another thing, and how much more debt can we have possibly handled back and forth. And you've talked a lot about how you look at government debts at governments around the world, and it's a little bit different field. But what you have talked about concern wise is this private debt that we have going on in some of these, I can't forget what they're called, but some of these unregulated lending institutions out there that are throwing around a lot of money and jumping in and out. As you look at that situation, Rich, give us an update on that.
Yeah, I still think that's a problem. It's called private credit. It's actually new to me, and I'm kind of surprised I didn't pick up on this because I have relatives who actually own private credit businesses. They're very small ones, and I just never made the connection there. What is this really? What it is unregulated banks. They're not called banks because banks should be regulated, but they're actually doing a banking service. What they're doing is bringing in mostly rich people's money and then loaning it back out with higher interest and some of the riskier stuff. But they're not regulated, at least very little. All right. So that's an issue in the sense that some people say, well, this is a true $2 trillion industry, but that's nothing compared to the overall debt banking industry. So don't worry about it. But it has worried some in Banker Street, Wall Street. And here's why. Some of these private credit institutions are borrowing money from regulated banks. If they can't get enough from private investors, they go to banks saying, hey, loan us some, we'll loan it back out. This is what even some of my relatives do as well that I didn't realize till just a year ago. They loan it back out and make a cut on that. All right, so I'm concerned the private credit industry will get worse before better. They're working at it, but they're not fixing it well enough. What's going on is some investors are calling them up saying, I'd like my money back. And they're saying, well, you may have to wait about 3 months for that. Well, investors don't like to hear things like that. Okay.
Right.
So
yeah.
To me, I'm nervous of a contagion that might upset the regulated banking industry that can then just maybe not cause that kind of problem by itself, but it could be another ingredient for this day of reckoning that I'm working on here, where we're just piling on top of crisis after crisis here and complications and problems, when we know we're going to come back to that business cycle recession that I've been saying isn't due to about 2029, 2030, making me nervous. It may show up next year. And this private credit, I do want to keep an eye on, and I have 2 funds of private credit businesses that are inside those funds, and they've been bearish going down for about a year. And my modeling just forecasts they're probably going down into next year. And that just makes me nervous when I'm also looking at other things that might blow up next year. So yeah, that type of debt is a problem. Granted, Wall Street downplays it sometimes. They get scared. They'll start talking about it for about a week straight, and then they back off saying, well, it's not that big of an industry. But we just don't know what else can it trigger there. When we look at overall debt, though, global debt is record high, governments and private business. And then you look in the U.S., it's also record high, but really the business kind of paid down debt a little bit, but still very, very high. The government debt, I don't worry about that. That's not real debt. That's printed money. My problem is I fear people in especially financial markets don't really get that. And so they're already scared of what's going on with all this private debt and all this AI business. They're borrowing way too much money. And now banks are charging them more and more for those loans. They're raising interest rates on AI loans. And yet these CEOs of these companies, they're just like drunken sailors. They just got to get more and more, you know?
Yeah.
You could just see I'm scared of the private debt in this country, even more scared of private global debt. I'm not so scared of the government type debt, especially if a government prints its own money. They really can't go broke. But the problem is a lot of people don't understand that. So, I can say this, but the point is if you're betting on the downside of the economy, you're probably very scared about that government debt right along with that private debt. And so you're going to behave, if I could calm people down on the government, then we could be a little more focused on how we're handling this next economic downturn. So I'm concerned it doesn't matter that they don't have it right. It's going to make them even more negative here in the future anyways, that government debt. So
yeah. Okay, so you're the only person I've ever heard say that about the government debt thing, right? I turn on the TV and the United States is 30 seconds away from full on financial collapse, right? And so explain that. Why is
okay?
Explain the whole government debt thing.
We basically have been lied to since 1980 when they started that debt clock that's down in New York City. I think it's Times Square or something. And it just goes up at a second, right? The problem is we print money, and because money is an IOU kind of thing, accountants like to put it as debt on a accounting sheet. So when they started talking about the government, they just automatically did that. Whereas the government, I don't know if they really think about it that way. They probably do the same thing because they probably use the same accounting systems. But when you print money, it's just printed money. But we show it on the books as a debt. Well, even if it were a debt, it's a different kind of debt. We don't really have to pay it off. And the Bank of England started in the year 1694, basically printed money for the king so he could go to war. That's why he even set up the bank. He had to go to war. Nobody was giving him money. All right. They never paid off that debt, Casey, year 1694. It's gone from like $2 million to like $2 trillion today. It would actually hurt England if they paid that debt off. All right. Well, if they haven't paid it off in 300 years, what makes us think they ever have to pay it off, right? So it's another piece of proof that our money systems, if they're what they call MMT money systems, which is really most of the countries in the world these days, as long as the government doesn't print its own currency, it does print its own currency, it doesn't have to pay that off really, and they'll never go broke, okay? You and I will go broke because private debt is real debt. But to go back to that printed money, if it is a debt, you have to have an asset. Nobody borrows and doesn't do anything with it because they got to pay interest on it. It's not going to sit on the table. So there has to be an asset to a debt. An asset does not have to have a debt. You can have it paid for. You don't need a debt. Well, if you have, what's the asset to a debt called US dollars? Well, it is the dollars. It's the money. So the money is the asset that links to the debt. So with that clock I just spoke of, they're only showing you one side of the counting sheet. We have a $39 trillion debt. We should put a minus sign in front of that for the true accounting, right? A column next to it should have a plus 39, right? And that's how it balances out on the accounting sheet. Well, where is that plus 39? That's the money you and I spend every day and work with. It's in our economy. It's our supply of money. So the government printed 39 trillion, right? It shows up in the books as a debt with them. But what they were doing is pumping that money in to pay their people, to buy things, do things, whatever the government needs to do. That money went into the private sector because the private sector had to do those things for the government. And what the government does is tax back some to kind of control it so it doesn't get away from them. They don't want inflation going too high. They also want to re-spend those tax dollars on something else and redistribute money around and help the economy. But they never tax all of it back. The money that's left, you and I use every single day. And it used to be that you had government money and private money. Well, we did away with the private money. I thought in 1840s, I got some friends telling me I need to restudy that history, that banks actually had private money all the way to 1910 or something like that. But why did they do away with private money? It was easier to use the government's money. Everybody could use the same money, and it created better faith in that. Today, what is cryptocurrency doing? Bitcoin? That is actually a return to private money, okay, and unregulated money. This is why I say crypto is probably here to stay, but it's never going to be as big and never going to take over and be the only money we use. The U.S. dollar is not going away because we find it easy that we all use the same money. And by taxing us, creates the faith in the money. The government basically says, we're going to give you this money because you're going to do things for us. But you got to pay us taxes and you got to pay it in our money. That immediately makes us use the money. And if you hear people talking, even people don't believe this, they'll say, well, you got to have faith in your government money. Well, the beauty of this is we're artificially creating that faith because we're made to use the money. But the reality is we really want to use it. It's so big now, even if we did away with taxes, I got a feeling we'd still use the money because it just makes it simpler. All that private money, you never knew when your bank might go broke and your money's no good. You know, today we can keep that money going. Yep. It's a beautiful, beautiful system, Casey. And really, this dates back to the castle days, and you hear the old rhymes and songs about the tally sticks. Those tally sticks, that was a way for them to keep track that the government says, I gave you money, now you got to give me it back for taxes, and then I'll burn that tally stick. Do you know they actually were still using tally sticks into the early 1800s in England? And they decided we don't need them anymore. We've got all this printed money and we got all the accounting. burn those sticks. They burned so many sticks that he wound up burning down a government building. The furnaces overheated, blew up, burnt down. It's a fascinating history, and it actually goes back thousands of years. It goes all the way back to Mesopotamia. Figured out how to use gold as an MMT, but then have printed money instead of the gold. So, very fascinating history. And the point is, we need to get onto this and have a better understanding because we're not using our MMT system the way we should. And China has figured this out. Years ago, we told China, you got to be like us. We've got this figured out. Here's our textbook. You read this. You do this. China came back, said, actually, we got one that's opposite of you, and we'd like that one better. We're going to do that. They're actually doing MMT, and they have a better economy than we have right today. Okay, even though their economy's come down to 4.8, and everybody's picking on them. When's the last time the U.S. had a 4.8% economy? We're at 2.3 right now, maybe heading for 1.7. 4.8 would be fantastic. You know, we'd be jumping up and down the streets right now if we had and here we are picking on China of coming down to 4.8. So they're doing a better job with the MMT. And I just hope at least the young people get on board this. It's coming. It used to be 90% of the economists were against MMT, and they just couldn't explain it. And we would ask them, hey, where did Bob get his money? Oh, he got it from Bill. Okay, well, where did Bill get his money? He got it from Bob. Well, that doesn't explain it. They couldn't understand it's the government printing the money, and they wouldn't factor that in to how the money flows around. And now we are seeing that some of those 90% economists are starting to switch over now, saying, you know something? This MMT is for real. It's been here all along. We just haven't used it right. So
like in that scenario, you were talking about, hey, the government does a big road project, right? Going to go out and redo a bunch of roads, build some bridges, that kind of stuff, which we desperately need to have happen, by the way. But so that would be the same thing. Hey, we're going to go out and print up $1 billion, $1 trillion, what I guess you can't say billion anymore. Everything's trillion, but $1 trillion, right? And we're going to do this road project. That then contractors then come in, bid the job, they get the job, the government pays them that money. The money then that they get from that pays their people. Those people go out and spend money buying houses, cars, whatever it is they're buying.
Yep.
And then that money gets back into the circulation for somebody else to use. Because when they buy that car, that owner of the car lot now has, whatever, $80,000 or whatever, their profits, $10,000 or whatever it is. They get that $10,000. Now they take that $10,000 and go spend it, give it to somebody else. That money then spreads across the entire economy. Is that what you're saying?
Exactly. Very good explanation. Better than me.
All right.
Yep. You got it.
I struggle through economics. Look at that.
They tax some of that back, and it's actually wiped off on the accounting books. In the old days, it would have been like the tally sticks. It comes back and they burn it. So
okay.
I think they recycle some of that too, so they don't have to print so much new money as well. By the way, the other thing is people then say, well, gee, that makes me mad in the sense you're telling me the government can just go nuts and just spend all the money. They don't necessarily have the right ideas. Well, that's correct. And the beauty of that we have to pay taxes gives us the right to speak up and vote and say, okay, you can print money. I know you're not going broke, and I know we're going to benefit somehow, some way. You're just building the economy. But shouldn't we have a say of maybe that's not the best way of spending money? Maybe you need to spend it over here. Or are you doing a good job of not spending too much? Are you just giving it away? That kind of thing. It would be like looking at the road building and saying, now, are you working with these contractors and getting the best price? So, yes, we have a right. I'm not saying MT, when I say the government can never go broke, don't worry about the debt. I'm not saying you shouldn't worry about the government. The government is us, we the people. You still got to speak up and say, here's how we think things should run. But the point is, when you have that conclusion, we're going to spend that money instead of complaining, well, that's just going to rack up more debt. You really ought to spend the money. And that's what China woke up to, all right? And that's where they have a happier people, and they're inventing so much new stuff. I saw a video of a restaurant the other night, and there's a little railroad train going above people's heads, and they're picking fresh fruit off it. Then I saw a picture of a hospital, and they got all these things where they don't have to get up and walk on the other side of the hospital to take papers to a doctor or send a bottle of medicine over. They got these little tubes, just like in the banking industry. They just put that stuff in the tubes, and bam, it goes to the other side. They're coming up with more and more efficiencies. They're planting trees and grass out in the deserts, thousands of acres out in the deserts. In the U.S., we're so worried that you can't do anything unless you make not only a profit, but it has to be a big profit. Otherwise, you should not be allowed to do it. Well, hell, we've had the U.S. Postal Service for the entire history of this country. It has worked. We all like it, really. And, it's never made a dollar.
Yeah, I don't think it's ever made any money. Yeah.
And yet here we are. Look at what we have today compared to our grandparents, compared to the founders. All this stuff we have, it never hurt us. So, if we want high-speed rail trains, we can have them. I'm not saying you want to go off half-cocked and say, do anything. But the way China looks at it, even if those high-speed trains don't make a profit, it's helping their people get to work and have a better life and enjoy life. That's then is really helping the businesses because they got a better employee and that employee's going to get there on time. Okay. So it's a different way of looking at things. And I really think the next 20 years, you're going to see the younger people figure this out. Both Republicans and Democrats are going to say, you know what? Government can actually be a good thing. So let's make it a good thing instead of just trying to burn it down, and let's make a better life for ourselves. But none of this, I'm not saying we go socialist communist. That's not it. That's not where we're going with this. We're just trying to balance and have a better people along with better business. And in this country, it's all business. And if you go over to Norway, some of these other countries, I got someone over there, they're an excellent person. They've been pounding out stuff every day. And they just showed they make the same amount of money as an American, right? They pay far more taxes than an American. But they actually have more money left over after the American because they were paying less for health care, education. Somehow that government made it work better for them. In this country, we're totally opposite that concept, and we're actually more expensive in all those things. We have lower taxes, but we pay more for everything else. They pay higher taxes, they pay less for everything else. Granted, both sides, there's not necessarily one side that's more right than the other. They just have to be happier than we are. So I'm thinking maybe they have something there where we don't have to truly copy it. But can we learn from these other countries now and say, where are we going? We've definitely burnt down our government. This is the time maybe to build something better and fairer and working better and help out greater numbers of the population. And the millennials, Gen Zers, for years I've always said the young generation always thinks they're put down and they're always going to be behind. And in the end, by the time they become an older generation, they find out they did okay. Okay, they worried too much. I've said that. I even said this 2 years ago. I bought a car and the salesman says, I don't think I'll ever be able to buy a house. He was like in his 20s. Says, I've just given up. I'll never be able to afford it. And I said, nah, you worry too much. Just get out there, keep working. Okay, make money. All right, but I'll tell you something. Today, I should go back and tell him I was wrong because I really do think the millennials and Gen Zers have been screwed over, okay? And they're behind.
Yeah, I agree with you, yeah.
Yeah, and here's the thing. And the millennials and Gen Zers are now, they're getting right up there where they have as much economic power, job power, consumerism power as the older generations. Problem is, when you go to Congress, there's very few of them. There's only like 6% of them are in Congress. So to you young people out there, some of you need to say, instead of going out and get that great, fantastic career or build a business, maybe you ought to go work for the government and work hard at making some changes for your generations. Because you know something? You'll actually benefit us old farts here that really have been going down the wrong track for a while. Okay?
Yeah.
That's my morning preach.
I've never noticed the age of Congress there. I've never noticed that they're not. They're
yeah, it's really
that's
high.
the oldest place on the planet, man. I tell you what, I can't. I've seen nursing homes that have younger people in them than the U.S. Congress.
It has gone too far, Casey. We need younger minds, fresher blood. And I do see the Gen Xers and baby boomers, which I pick on a lot. I'm on the lower end of the baby boomer, but we're changing. You can see more of us learning some of this stuff, picking up on it. We really are getting concerned of the future, and we are saying, we voted in the last few years to do something different, but this isn't the different. But we're on the right track. It's got to be different. So this is some kind of evolutionary process. I'm confident we're going to pull out of this in the next 5 to 7 years. I'm just worried it might get even worse the next 5 to 7 years. And I'm still worried of an economic problem, if not next year, probably 2029, 2030, and a recession, stock market down 35, 60%. And that might actually be a good thing because some of these disasters, these trials and tribulations, they smarten us up so we go on to the next phase of evolution of actually moving afford. So I talk a lot of down stuff right now, but really I think in the next 20 years, I feel like I'm an optimist we will make this. But boy, if we don't speak up more and get us excited and fired up and get out there and do something about it, we might wind up the next 20 years just doing a whole lot of nothing. And if that's the case, I think we'll have a lost century, whereas the rest of the world just keeps marching right on past us, So we really are in crisis, and I've broken this down where I think we've put an end to a phase from 1780s, 90s to now, a phase of something else from 1930s, 40s to now. And now we're putting an end to phase to about President Reagan, Nixon, 1980 to now, okay? And so this tells me layers of crisis on top of one another, that we are in a polycrisis time. And I didn't even know of that word till just last year. John Authors on Bloomberg said, hey, somebody just wrote an article on polycrisis. And it was a really good article. I forget the person's name now, but I wrote to John. I said, gee, I never heard of polycrisis. Neither did I till now. Now you can see around the world they're talking, yeah, we're in polycrisis. So we're messed up people around the world. Yeah. We're really messed up people right now, and I truly believe it. I wish we could have a national psychologist. I think we need that more than the witch doctor right now. So, but again, I look out next 20 years. I'm actually optimistic. That's one thing that people say, boy, I talk down Trump more and more these days, when I used to like Trump back in the 1980s. But I just feel like maybe the blessing is burning things down is going to allow us to rebuild something better. So I do a lot of negative talk, but I am trying to get more into that optimistic tone here of we can do this and make things better, So
give the definition for polycrisis so people understand what that means.
It just means many types of crisis happening at the same time. Yep. And I can see this some more. I've been getting involved in psychology type stuff here lately, and the religion and the politics and society, culture, civilization. And I could see some of these cycles I'm using in business and economics. You can see them in the history of human beings. You can see it in anything and everything else. There really is something to it. And these people that discovered 4 types of generations, types of people, their names are Strauss and Howe. Strauss died a few years ago, but they wrote a book, Fourth Turning. And they predicted, they wrote it in 1997, and predicted we're going to be a crisis people from 2000 to 2030s. And they said it's the 4th generation is always bad, okay? And here we are, we're bad. And even though I started picking on a certain type of generation when they were born, they're the bad people, it really is a blend of 4 types of generations. Every 20 years, that blend changes a bit. So we can't really blame it on just one group of people here. We have to blame it on all of ourselves that, we're in the toilet here. But I will say the millennials and Gen Zers have a right to say, hey, we're a little on the young side. You can't blame us as much. I will admit we need to blame the Gen X and baby boomers first, okay? And even though I pick on Republicans a lot these days, and I used to be a Republican, I will say the Democrats, they're just another Republican. And Chris Hedges, he was just out on a video. He worked for Ralph Nader, and he just said he thinks the Democrats are actually our worst enemy, really, in a way. The Republicans are the worst people, he said, but the Democrats are worse in the sense the Democrats are not doing what they're supposed to do. And he said they're right in with the billionaires as well. Oh, yeah. And he said, Ralph Nader, the reason he ran to be a president is he suddenly realized the Democrat Party was going to say, no way in hell are you going to get elected or do anything. So he ran on his own. And Chris Hedges said, boy, today it's worse. He doesn't think we're quite in a fascist state yet, but boy, everybody else is saying we are fascist now. But he says we're not there, but boy, we are close. He says we got basically a day of reckoning. We got to get on board and turn this around. And so we have to blame both Democrats and Republicans. And therefore, unfortunately, that means we blame ourselves. We're just not a good thinking people. How do we calm down and figure these things out? And I have ideas as well how to fix it. I mean, we need Medicare for all, raise minimum wage. We need to save Social Security. We need to pump money into retirement accounts, which Trump has a program. He's getting billionaires to donate money to give to children for retirement, right? Great idea. It's a Band-Aid, unfortunately. Democrats, if they really had their brains screwed on straight, they would jump in there and say, let's make that even better and pump some money into that and get people caught up, because really, especially Gen Xers down to millennials, they can't make enough money to buy the stock market because it's going up so fast. They can't buy as much as I did when I started buying when I was 20, okay? So how do you make as much for retirement? And if you're buying 4, 5, 6 dishwashers in your lifetime when your great grandparents bought 1 or 2, that means you're spending 4, 5, 6 times more for your entire lifetime, right? We're not looking at it correctly. We look at today's prices in the store and we get all scared. What we should be looking at is this whole corporate world has rigged it, so we have to keep coming back to the store, and we're spending more during our lifetime, but our wages hasn't caught up with that idea yet. And corporates don't want it to catch up, okay? They want big profits. Really, I would like to go back to low profit businesses, a few non-profits, and occasionally some company gets lucky and they have high profits. There's too many businesses with very, very high profits that in the old days that would not have been allowed. And Republican President Dwight Eisenhower, he was actually basically a Democrat carrying on FDR and Truman. He said he loved high taxes. He had 70 and 90% tax, but they were using them in a correct way. And he said, this is incentivized. When Reagan come in, Reagan said, no, we need to do the exact opposite. The rich need to pay lower taxes. That money will go into the economy. Well, it did start to work in 1980s, 1990s. Consumer sentiment went up. People were getting happier. But in 2000, it just started going downhill. And boy, in the recent years, it's just not simply working, Casey. I mean, I voted for Reagan. I was for all that stuff. But I got to tell you, if I could go back in time, never would have done it. Okay. But, I think it had to occur back then because there were other things not working. I know we probably did the right thing doing with Reagan. The problem is it's now burning out. And we're not quite there yet figuring out, well, how do we fix that? What's next? And so again, I got a lot of hope here for the younger generations. We gotta give them a chance here. The older generation want to beat up on them about it. They need to be inspired to get involved and see what else can they come up with that we can't quite get our hands around. And then hopefully we all work together and go to the voting booth and get this done. And I know we will get it done. It's just frustrating right now. I have to talk the negative side because I'm so scared people are just sitting back, not really getting involved in this, and it'll just drag on and on. Well, you can drag it too long and that business cycle rolls over the other way. And now you're trapped and you're one of those countries that just doesn't do anything for 100 years, And that's sad. This country doesn't deserve that. We don't deserve that, right? So thank you for allowing me to preach here this morning.
You're welcome. Hey, man. You're welcome. Come on and preach anytime you want to, Rich. Preach on anytime you want to. So, okay, so part of that inflationary issues, talking about that, you got the inflationary hedge of gold. Gold's done, we hit all-time record highs with gold and everything that goes along with that. Based on where things are at now, looking at gold, thoughts and reactions to what you see happening in that market?
Yeah, just analytically here, I'm bearish gold into next year, at least till November, December. It might go down about 3,400 an ounce. I'd like to think we just put a top in for the decade and gold's not going to a record high until next decade. And we might even put in some super cycles that it's not going up for a couple of decades. Problem is, I've learned I got some flaws there, some problems with those very mega type business cycles. I got some learning to do, rethinking on that. And I want to be cautious of that. And I got some friends who are really, really good with gold, and they think it's going to 10,000, this decade. All right. So I want to be careful how I forecast my more
important sell signals. I think they think the price of gold is going to double between now and the end of the decade?
They think it's going to go to 10,000. Yep. Now there's others saying but saying it could take a lot longer. Some of them think this is going to last for the upside for a couple of decades, something like that. So I want to be careful trying to forecast that like once a decade sell signal. It may have just occurred. I took a shot at it, but 2 weeks later changed my mind and said, nope, I don't want anything to do with that. I'm not selling. If you want to go back to buying, go right ahead. But then a few weeks after that, I said, now, wait a minute. We can have what's called a minor long-term kitchen business cycle downturn for 6 months to a year and a half, something like that. And I said, now I'm back to being bearish. I'm glad I did it. I turned bearish on the way down, but it was still high enough price compared to today. It looks pretty smart. And I'm feeling fairly confident that it's going lower in the end of the year to next year. And then we'll reevaluate whether it's going to recover after that. But I don't particularly care for buying it here. I don't think it's found a bottom here. I don't like that idea. I think Bitcoin started down ahead. Bitcoin actually has a broken kitchen business cycle, and that is very strange and not a good sign. If Bitcoin wasn't such a small factor compared to stock market economy, I'd be nervous as actually forecasting a coming problem for the economy here by next year. I think Bitcoin should go down in next year, but it's already been beaten up enough. What it may do is go down slowly now or sideways for a while, but I can't get excited about buying Bitcoin here either. To take that back to where we were thinking on inflation, again, I think it'll go higher, but I think the gold market now recognizes interest rates are probably going to go higher in step with the inflation now. And what that does is raise real interest rates, and the real professional gold traders, they don't like rising real interest rates because it makes it more expensive to borrow money and buy gold. So I think what's happened here is they suddenly woke up, we put this up so high so fast, we ought to take some profits. That doesn't mean they're giving up on gold. They just feel in the next 6-12 months, there's a chance we're fighting inflation, that if you bring the inflation down, you're going to bring gold down. But the point is you can bring gold down ahead of bringing down inflation because you're bringing interest rates up. It's an interest rate calculation for them that they're concerned, yeah, this will work and bring down inflation. We bet on the upside of inflation. So now let's sell some gold. Now, that bull market we've seen the last few years in gold, and it was a big bull market. That wasn't entirely on inflation. They're worried over anything, everything. What are we doing burning down the government? What are we doing on all this financial structure and the debt? And so they were buying gold for many, many reasons. They think there's a big change going on in the world. And it is. When you look at the poly crisis, they made the right bet, right? And they took it seriously. There were some billionaires out there really loaded up on gold. But some of them are taking some profits right now, and I think gold's got a bit lower to go here. And then again, we'll reevaluate, see if it goes up later in the decade. If we are in a 1970s inflation scenario, and I think that's what's scaring Warsh, the new Federal Reserve chairman, you look at it. You put 1970s, early 1970s and 2020 up to 2022 inflation like that, they do exactly the same thing. Then they come down at the exact same time where we are now. But starting now, they should be going back up together right in towards the end of the decade. Now, in 1970s, by the end of the decade, it was higher than that first run-up inflation early 70s. If that's the case, we're going higher than in 2022. That's what's got some scared at the Federal Reserve, that maybe this is looking too much like repeating the 1970s. I don't buy into that. Okay, my business cycle is saying, we can be too talented this time around. We can raise those interest rates fast enough and respond fast enough. I don't think you're going to see that. I don't think we're going to put inflation higher than 2022. But I don't know for sure. We don't know what else is going to blow up in the world, right?
Right.
But I do think we can have some higher inflation here for a little while at least. And eventually I think they will stop it and it'll look a little bit different by the 1970s. But again, I think the Federal Reserve is saying they got to stay on top of this. Don't let it get away, because they could wind up messing up like they did in 2021, 2022, right? This could get rock and rolling here, especially if oil were to go to 120 or higher. Okay, we got close to 120 or something like that, backed off a huge amount. Now it's coming back up. We're up to 100 now. Starts going over 120, people are going to start saying, boy, maybe we can be like the 1970s inflation, And yeah, that's going to be real ugly for the stock market. We probably will fall into a recession in the economy, and it'll probably hit us next year if they want to keep doing that. So we need that oil to stop at 120 on the futures. The cash, I think, actually went to $200 a barrel, I believe, for some countries. So a big difference. If you talk about basis,
that the other day.
Yeah, if we talk about basis in the grain markets, man, that basis in the oil must have been something else.
Yeah.
So so this run up in oil right now. It's such a nice march up, such a beautiful, very orderly market. Boy, I think they're getting more worried here that they backed off oil too soon. I think they're saying, at some point there's got to be a line drawn in the sand where this U.S.-Iran war just goes too long. Okay, and that oil tank, are we going to run that global oil tank to zero? Yeah, well, if that happens, it's going to be a rocket ship in the oil price, right?
Yeah.
And So, and here we are, that oil supply is down to 1980s, and yet look how much we've grown the population since the 1980s.
Yeah.
The only thing saving us is this alternative energy. We've been building that to help, but it may not be enough. Yep.
May not, yeah. A lot of moving parts, Rich. A lot of moving parts.
This is a heck of a decade. I'll tell you what. I look back at every decade has such wild, crazy times, especially with that decade bad business cycle. But for my lifetime, I'm starting to think, yeah, this is the craziest I've seen. And it makes sense now when I look at the civilization culture cycles that I'm tying in with the business and this poly crisis. We really are. This is, if we survive this, and we should, we've completed a phase for the entire history of this country. We're going to start a new phase for the next 200 years. And I'm hopeful we get democracy to work, because you know what? The more I dig into this, the founding fathers really didn't know what to do with democracy, so they played it too safe. We never really had a democracy in this country. That's the truth. I've just woken up to that in the just past 6 months here. And we need to fix that, Casey. And you know what? You and I need to be able to vote more on more things. Congress should not do it all on their own. And we ought to vote from our darn phones. And there's a company out there, I forgot their name, I got to remember to get that name, write it on the wall. They've already invented a voting system on the phones. And they said, if you look at your local elections, only 3% of the people vote. It's just not, they're too busy. They're just too busy. And they're saying, but if you gave them that phone, they're convinced 30% of the people vote instead of 3%. Well, what I'm saying for our federal elections, I'll leave it up to the states to decide what they want to do. But for the federal elections, make it a mandatory voting, make it easy registration, voter ID, wrap that all up so it's very, very easy. Vote through the phone, make everybody vote that's supposed to vote, and then we can get a true opinion of what do the American people want. And that's going to put the pressure on Congress. Then in Congress, we need to make sure they read the bills before they vote for them. And if they don't, fire them. And they get a very nice pension, by the way, and they get it way too early, in my opinion. Take away the pension. All right? They're either going to do their damn job or not. Hire somebody else, right? And then you and I need to be able to vote on some of those bills. And I don't know why the government doesn't go out there and ask us, what kind of country do you want the next 20 years? Norway's done a better job than anybody in the world, and they got the happiest people in the world. They just started a new program last year. They went out, got people right off the street. They just took random people off the street. And they just said, we're hiring you. We're putting you on a project. We want you to work the next few years, and we want you to tell us, where do you want Norway to be for you and your children the next 60 years? I think it was 60, okay? When have we ever done that? I don't think we've ever done it. There's been little projects here and there. I don't think we've ever done it. And what's sad is the Greeks, thousands of years ago, had a better democracy than we had, and you could vote easier and simpler, and they knew what they were doing with it. And today we have all this technology. Why can't we have a better election system, an honest election system, make it work more efficiently, and make us feel involved? The reason everybody's given up on democracy is they felt like it's not working in Washington, D.C., so why the hell do I vote? I used to say it all the time. My wife would kick me in the butt because she's saying, you're the guy that's always hollering, get out there and vote, and then you're not going to vote. So It's a good thing my wife gets me out there to vote. And do away with electoral college. I don't care what anybody says. I feel like my vote doesn't really count under that system. So throwing a lot at you here, but I think it's all good stuff, and I'm not a genius at this, and I don't expect everybody to agree or even do everything I say. But boy, if we could do most of this on this list, I'm telling you, we got a bright future coming, and I think we can make this last for the next 200 years. We had a fantastic phase the last 200 years of just creating this country, but there's a lot of skeletons in the closet. A lot of things didn't work right. I'm starting to think this is the beautiful moment to say, okay, we stop here, and we're starting a brand new country for the next 200 years. And but for that, I just don't want people acting like a king and taking over the country, saying they're going to take care of that for the next 200 years. I don't like that at all. I want you and I to be more involved and be able to vote quickly, easily. Okay, and this is the beauty with AI. We should say, okay, we're going to work less hours so we have even more time to discuss. I mean, the founding fathers, you look at their days, we keep saying the old timers had to work so hard. It's amazing how many hours they had to spend at the tavern talking about, well, we need to break away from England and we need to set up, and how are we going to do this? And they were just regular people off the street, and they were talking those things. Today, you go to the local coffee shop, nobody, they complain, but they don't have constructive talking. Well, most of them don't even have the time to do it anymore. We work 8, 10, 12, 14 hours a day, right? Gosh, this could be a very welcome event, really, even though I call it a disaster right now, to change something better. And I don't even know how to get myself out there and motivate people, but we got to do this, because the sad thing is the tools are right there setting right on our table. We just don't pick them up and put them to use. So, well, here's a vote for happier days.
Yeah, there you go. Well, I'll tell you what, Rich. I'll come to Maine sometime. You and I can debate the Electoral College, and we can go for.
Oh, you like it? Okay.
Okay.
I get it, especially if you're more rural, and I grew up rural too, and I get the feedback all the time saying, today I disagree in the sense of the amount of communication, and the interesting thing is down in New York City, we always think they're all liberal, and I was down there for a convention, and then Halloween even, boy, that was an interesting night. And what I learned was that, that was quite the night. I almost got lost on the subway, and man, that's not a thing to do either. So anyways, what I learned was, you know what, they had the same Democrat, Republican kind of thinking as we have out in the rural. It's just the rural, the whole town might be one way, but the next town might be a different way, that sort of thing. So to me, I don't like the Electoral College in terms of, to me, I think it's something that can be corrupted, but I also think I don't think it makes the impact it used to in the sense that we just have better communications and news and knowledge, and we can vote in every single town, whereas, boy, sometimes people had to go to another town in order to vote, or even another state, that kind of stuff, you know. So I think it's just kind of outdated, but if I have to, I'll let that one slide by off the list. It's the other things that are really more important to make this better election system and get us involved. And we're going to have headwinds with this because even the Congress don't really want us that involved, because it goes all the way back to fears even the founding fathers.
I don't know that it's not so much the Congress that doesn't want you involved. It's the people that paid them $1 billion to get elected that don't want
very good point. Good point. Yeah. I agree.
That's,
yep.
Yep. And there is this fear. It takes you $1 billion to become a congressman or a senator or a president. That's not $20 at a time. You know what I mean?
Yeah. So. Yeah, I'd rather fix that than bother taking away the Electoral College. Yeah.
Take away
I'll make that trade with you. Let's do the billionaires and not the Electoral College.
There you go. I like that. Get rid of the PACs, and it changes a lot of things. You know what I mean? Super PACs changes a lot of things.
It does. Yep.
For sure.
I agree.
All right, Rich, good place to stop, man. It's a good conversation today. Folks want to reach out to you and get more information about your podcast or getting over and looking at your newsletters and the information. What's the best way to do that?
Go to criticalpointpod.com and look through the website there. And under the blog section, you'll find the newsletter that's for free. That's also normally right on the home page if you scroll down. And you might have to scroll quite a ways down to see a very short list of the latest videos, and most of them will be locked up. But hey, try that 60-day free trial, because I used to be 2 weeks, and I said, everybody does the 2 weeks thing, but a lot of people complain. I hear especially my competitors will say, well, sometimes people say, you didn't give me quite enough time, And I thought, something, I know they're going to like it just in a few weeks, but let's just do the 60 days and they'll be on board. And I run a high retainership. I have people who've been with me for over 20 years now, and they're even retired. They came on board through their business, sold their business, and retired from their business, and decided to stay on with me too. So I got some pretty good loyal followers. You give me a chance, you'll probably be sticking around at least for the rest of this decade, because boy, we got a lot of fireworks coming yet. Okay.
Yeah.
Good and bad.
We do. Yep. For sure. Well, Rich, appreciate you being on the podcast. We'll catch you again next time.
Thank you very much, Casey.
All right, that'll do it for this edition of the Moving Iron Podcast. I want to thank Greg Machinery Pete Peterson for being on this edition of the Moving Iron Podcast. I also want to thank John Deere for being the sponsor as well. My name is Casey Seymour. If you want to find me on Facebook, Twitter, Instagram, LinkedIn, wherever else I'm at, it's either at Moving Iron Podcast or Moving Iron LLC. You can find me there. You can also go to the Ag web page, look under the podcast section. You're going to find the audio version of that there. You can also watch the video version of this over on the Farm Journal YouTube channel. Check it out there. Moving Iron Summit's coming up here in Louisville. If you're a dealer and you want to attend that, that's September 22nd, 23rd, and 24th. Check that out there if you're interested in that. All the information is on AgWeb under the events page. You can find all the information there about speakers, program, the whole deal. So it's all there, how to book rooms, all the stuff's right there. So check that out. So looking forward to that, to everybody coming to that again this year. Special thanks to all the people on the backside that make this thing happen every month. So I appreciate it, or every week. Thank you for all that you do for that. So with that, I'm Casey Seymour. Let's go move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.